everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's keep in mind that there's always risk involved with trades that you take. So you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard with some useful tools that are built into our web trader and the AvaTrade app that makes the calculations pretty much automatic in the order window, so you understand your exposure, your potential profit, all of those things before you even take the trade. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both your MT4 and MT5 accounts from one location with the advanced functionalities that we offer. Such as the free signals, the market news coming in, the market buzz feature, the economic calendar. If you've attended past webinars, you're familiar with these tools. But if not, we'll make use of some of them today, and specifically the technical analysis side of things we'll focus on the most. Now, if we log in here in the upper right-hand corner, we'll be in the web trader platform. And before we jump into the technical analysis, we should probably talk a little bit about the fundamentals, what's been happening today in the news or leading up to today. I think, one major storyline is the Middle East tour that President Trump is doing, negotiating agreements on behalf of the U.S., basically business agreements, security agreements, etc. And at the same time focusing on trying to resolve some of the tensions in the Middle East, working towards maybe an expansion of what they call the Abraham Accords, where various nations have signed on to basically recognize Israel as a country and to normalize relations between the different countries in the Middle East. And so he's kind of on a mission both for business and for peace. And so there's kind of a positive vibe in that regard that's been going on through the day today. And then also there's talk of perhaps peace with the Russia-Ukraine situation, with a meeting supposed to occur at some point here soon in Turkey, perhaps face-to-face with the Russian and Ukrainian leaders. And we'll see how that goes. And I think President Trump sent Marco Rubio there on the behalf of the U.S. to see what kind of help he can be as well as maybe a mediator. And so beyond those positive vibes, we're also looking at some positive feelings about the on again, off again kind of trade war situation between the U.S. and China specifically, and it looks like there's been some agreements that have been reached. Tariffs are going to be pulled back, I think, on both sides, and there's a lot of optimism moving forward that the dominoes will start to fall, so to speak. First it was the UK, now it's China, looking at other countries to soon have agreements with the U.S. and to have the tariffs lowered back down. With a mutual agreement between the U.S. and various countries. And so with that optimism, we see the equities again trying to push up, not with as much momentum as it's been maybe in the days prior, but still some optimistic sentiment out there. And so with that as a backdrop, then we're looking at what's going on with the technical analysis then. If we're looking at the equities, we get the feel that, okay, if we find a good support level, perhaps it'll hold with all the kind of positive vibes that are going on. Maybe we're looking for a bounce off of a support level if we can find that type of entry point. Just as an example, maybe we're looking at the US dollar potentially having some strengthening with all these huge multi-billion-dollar deals, even reaching $1 trillion of business dealings that have been promised in the coming years, of investment from Saudi Arabia and Qatar now, and he hasn't even gotten started yet on the UAE, which is next on his trip. So it's looking like kind of a windfall for the US in that regard as well. So with that out there, we might be looking at US equities and we might be looking at the US dollar pairings, etc., if we're trying to find signals that kind of coordinate with what's going on with the fundamentals as well. So it might make sense. Let's look at something like USD JPY and say, okay, if fear is dropping, then a safe haven like the yen might weaken. And there's reason for the US dollar maybe to strengthen. And so we can take a look. Let's see what the short-term signal is. Doesn't surprise me. It's a buy signal. It's uptrending as we would expect in the signal. It hasn't yet reached the take profit zone up here in the technical signal, but Trading Central's reading this as a technical uptrend. At the same time, fundamentally, we already assumed it might be uptrending. Okay, before we looked at the chart, we're thinking, reason for the US dollar to be strong fundamentally, reason for the yen to be weakening with the positive sentiment. And then we look at the technical signal and it also says buy. Okay, great. So let's do our own technical analysis and see, is this an entry point that we like or not? You know, with the current situation, I feel like probably if the momentum continues, why couldn't the US dollar reach the high that it was at just earlier this week? I mean, go back a day or so and we're up here. Okay, and now we're here. So with the current situation, it feels like, unless the news changes, right? The news can change, so we're going to protect ourselves. But this looks like a support level here. This is old resistance from last week, resistance from the start of this week, and then we blow above. This move up, okay, was the realization of, hey, tariff trade deal between US and China. And the US dollar flew up against the yen as the yen weakened with fear dropping and positive news for the US, so USD strengthened against a weakening yen. Up it went. We pull back, and now we find we're just above this old resistance level, which should act potentially as support if it tries to pull back down. We just broke back above it again. And I would say this is the bottom of the support here. Okay, we actually opened here, bounced around, and then went up at the beginning of the week. So we've got a zone of support here where it's resistance at the top and support at the bottom. And so kind of doubly protected with a couple support levels, one here and one here, to get maybe a stop loss down below here if you were looking to go long with that technical signal from Trading Central. Okay, and this is kind of how I suggest you qualify the signals. You're getting a technical signal from Trading Central, but you don't have to just blindly follow them. You can perhaps improve your success rate with using those signals. If number one, you look at the entry and see if you like it, look at the current trend and see if it's trending in the direction you think it should, and also consider the most recent fundamental news and is it in your favor? Or are you working against the current fundamental news? And it feels like the fundamental news is in our favor. It looks like it's an opportunistic entry point with a nice support level from the start of the week here. And take profit, much larger potential profit to without even breaking the high that it hit this week, and shorter distance to our stop loss to get below all of this support. So the risk reward setup is opportunistic as well. And we do see on the 2-hour candles that this is uptrending. Okay, it bounced off the support from the start of the week, tested it, and bounced. So that's an uptrend on the 2-hour candles. If we want to look at it on more of a micro view, here's the 30-minute candles. Okay, we did break above this resistance just a couple hours ago, showing a current uptrend. Okay, so if I was going to buy on this, okay, take profit, I'm going to say, okay, if the news doesn't change, then maybe the US dollar can push right up towards this resistance level up here. Okay, and so I'm looking just before that, then maybe 148.50 as a take profit. So 148 and a half, 148.50. And where's my stop loss then? Okay, take profit here, 148.50. Okay, this line here is my take profit just before the resistance line that we drew. So it doesn't have to break this week's high to hit our take profit. And then stop loss. I'm going to put a stop loss below this support level, which is this old resistance, and also below this support level, which was the opening price of this week. It would have to break down into the gap between last Friday's price and Monday's open in order to hit our stop loss. And if it enters that gap, then something changed in the news. Fear hit of some kind. Something hit to weaken the USD and strengthen the safe haven yen. If it reverses this uptrend and breaks down into the gap created from Friday to Monday. Okay, so if it gets down here, I'll just accept that the trend changed. Something probably changed fundamentally then, and take the small loss. So 145.57, I would be convinced that I'm wrong on this move. Okay, 145.57. So now I look at my setup and I say, okay, from a technical perspective, this makes sense. I'll give up if it reverses into a downtrend back into this gap, and otherwise I'll stay with it until it hopefully reaches near the high that it hit this week, because the news has only gotten better for the US dollar as the week progressed. So no reason in my mind from a fundamental perspective why this couldn't try and challenge up here. There's no guarantee that it will, so we're protecting on the downside with a reasonable stop loss. And now we see it's a better than 2-to-1 ratio, potential profit to risk. So if I'm right even 1 out of 3 times with a setup like this, I still make a small profit. And if I can be right 35, 40, 45% of the time, I'm making a really nice profit with this kind of setup, okay? Because I'm making better than 2-to-1 profit. I can lose twice and win once and still have a small profit. So if I can win one, lose one, win one, lose one, with this kind of setup, I'm looking pretty good, okay? Actually really good. So now I just need to adjust my trade size to be the amount of risk that makes sense for me. So with one lot, I'm risking about 665. Maybe I go 0.85. Now I'm risking a little more than 1% of my account, 0.82. And that's almost exactly 1%, a little less, 1% of my balance. And you can risk the amount that makes sense for you, for your balance and for your risk tolerance. You could be risking 0.5%, 2%, whatever makes sense to you. I set it up as an example where I'm risking just under 1% to make about 2% profit on the account. And if I like the setup, I'm good to go. I know my exact risk to the stop loss. I know what I stand to make to the take profit, and now I'm ready to go. And so I've got a trade that makes sense from a fundamental perspective, hopefully, assuming the news doesn't change, which obviously it could. But right now the news seems to be on our favor, the fundamental side of things, for the USD to maybe strengthen some more and the yen maybe to stay weak. From a technical perspective, we certainly have an uptrend. We've got a couple support levels that it's broken through that confirms an uptrend and could act as support to help us out to protect our stop loss down here. And we only need to reach near the high of this week without having to break it to hit our take profit. Okay, and you can revisit this in a few hours. You can revisit it tomorrow morning, etc. And you don't have to wait until it hits the take profit if you don't want. If it's halfway up and you like the profit that's showing, you can close it early. But this sort of move can make sense to just be patient with it and see if it plays out. Okay, and you can always check on your trades. You just go to the positions section and you can check how your trades are doing. We're in profit, but we're just getting started. So we want to let that run. Unless you're a scalper and you like to open, close, you could take those small profits as they kick in. And a lot of times when you have the fundamentals on your side and you get in on a trend that's in the direction, showing momentum in the direction that you want to go, many times that's the way it starts. You get a quick profit and you can scalp profits that way, in and out, if that's your style of trading. For this trade, we'll let it run. See how it goes through the evening and into tomorrow anyways. I may close it before the take profit because I have another webinar tomorrow. And so I like to usually have a clean slate without any trades running when I start the next webinar, but we'll see. See where it's sitting. Maybe I'll let it run even through tomorrow, assuming it doesn't hit the take profit or stop loss before then. All right, any questions, comments on the setup that we did there with the USD JPY before we move on maybe to another example? I'll pause for a moment. Okay, great. I must have been clear. I'll go ahead and maybe bring up another example of something we could look at, since we're looking at, okay, the fundamental news combined with our technical analysis, which really is a strong focus within the session. So we're looking at US equities. Makes sense because the fundamental news that we talked about is really positive for the US. It's positive globally even as well, because it's good for the global economy if there's more likelihood of peace and those types of tariff agreements around the world. A lot of times there's the saying, as the U.S. economy goes, so goes the global economy. If the U.S. catches a cold, the whole world sneezes. That sort of thing is kind of the perspective with how the U.S. economy affects other markets around the world as well. So as we look at the US 500, first maybe we look at the signal again. So if we click here, we'll get the technical signal. Again, not surprising, it's a buy signal. And I promise you, I didn't peek at these before we started. I was just putting together two and two that, the fundamentals all seem positive today. And makes sense that as we click on the signal that it's uptrending a bit and it's predicting a further move up with that uptrend. So we've got support levels down here. This is the pivot line in the signal. As long as we stay above that line, which is around 58.70, this signal says it's a buy. If it drops below there, then something must have changed, because that would establish a strong enough downtrend that then they would say sell with expected dropping to these lines down here. So that's how you read these signals. Right now, the pivot line is here. If it's above there, it stays a buy signal. If it drops below there, it becomes a sell signal with take profit suggestion in this zone here. So it makes sense that if you're buying on this, if you think the fundamentals match this technical movement, which from what we've talked about, we probably do think that, then barring any big change in fundamental news, this likely could push up towards these take profits. So you might put your stop loss just below the pivot line right here. Because if it does break below the pivot, that establishes a strong downtrend, and that might be a technical reason to get out of the trade then, to admit that, okay, this one reversed and we'll call it quits and take the small loss. So stop loss below the pivot, take profit up towards the take profit zone up here. And this is more of a shorter term type move with this setup within the signal, because that's not very far away to go from 59.14 to 59.60 for your take profit. It's a short distance, but these signals tend to be shorter distance-wise for shorter type trades. Now, we can analyze this maybe a little larger and say, if we're looking at a 4-hour candle, here's our uptrend. We gapped up into the week and continued up, and this is where we're at today. We can take a look at 1-day candles just to get a bigger perspective and say, okay, where's the resistance up here if we're on the 1-day candles? And let me delete some of these lines. And sometimes you have to do that to get a better perspective. You can't just sit on the smaller candles. If you don't see the appropriate price levels that you're looking for where might it find the next resistance level, then sometimes you have to go to the larger candles. And what I see here is resistance. If I drag one of these lines down, this is where we are now. We already broke through these resistance levels here, so we're up in this area. And if I drag a little further, I can see here. Okay, and the current price is here. So we're sitting here. And you see this was an old support level. on these one-day candles here. So we've hit a little bit of a resistance here at the bottom of these candles here on the one-day candles. And this is about where, if you go up a little, this is where the take profit was for that short-term signal. That's why they're saying take profit there, because you see these two one-day candles. You see there's two wicks. One candle here, and then another one here, where the movement sat on this price for a couple days before breaking below and going back above. So if we then go back to where we are here, we're just below that line. And it makes sense that that's where it hit and went down yesterday. It's hitting again and having trouble breaking through this area here. So if it does break this price level, which is resistance from here, which was old support, okay, if it breaks through here, then the next resistance level isn't until here, okay? So on the one-day candles, I'm seeing that it might make sense to do a pending order on this US 500. If it has enough momentum to break this resistance that it's just below, then it seems to be clear sailing all the way up to 6,000. I drew this line 59, 99, 98. I couldn't have got or 93. I couldn't have got much closer to 6,000 even for the resistance level that's up here. Now, if we go to 4-hour candles now, see if we can see those lines still on 4-hour candles, and we can. Okay, so this is the resistance here. And many times you look and you say, why does something reverse where it reverses? Why since this week it's been hitting since earlier in the week and dropping, hitting and dropping, hitting and dropping. What is it about this price that it keeps hitting and dropping? We just saw it on the one-day candles. It's an old support level from weeks back where it was hitting and going up from there. And so that price level is deemed important by traders. And to get back above that, it's going to take some momentum, okay? Maybe today's momentum is not enough. Maybe it is, okay? Short-term trade, you could short this because it's pushing down off that resistance right now. And you might catch a pullback down, okay? From a purely technical standpoint, you could have already done that. You see it's a red candle on the 4-hour candles. It hit this resistance and pulled back. Why would I not bank on it continuing to drop right now? Why would I not maybe do a short-term sell off this resistance level? Because I don't like to work against the fundamentals. The fundamentals right now say equities have a reason to climb. And that's why the signal from Trading Central was a buy. Okay, the technicals showed on the smaller candles, the 30-minute candles, an uptrend. But you can see why, if you look at the bigger candles, you might be hesitant to do that short-term trade because it's right, their take profit zone was right near this one-day candle resistance line here. Okay, so in analyzing that buy signal, I would prefer, after doing our own technical analysis, I would prefer to say, okay, if this breaks through this resistance and hits here, so if this goes up to 59.31, then it's broken that resistance, then I'll get in. Then my take profit is up here just before 6,000, which is the next resistance level on the one-day candles. So unlike the last trade, I'm only going to enter on this trade if it confirms a further uptrend. Why? Because the last trade was already uptrending. This one is right at a resistance level and hasn't broken through it yet. So I'm waiting for a confirmatory breakthrough before potentially buying on this trade. And if the news changes and this goes shooting down, then okay, we don't lose. We didn't get in on a hesitant uptrend. Okay, so 59.31 and just below 6,000 are the marks to enter and exit if you think this will climb. Okay, so what I do then is I click buy. In this case, it's a pending order, so I'm going to say execute when price hits. And if it hits 59.31 or somewhere near there, it doesn't have to be exactly that number, 59.31, you could say 59.35, 59.30, okay? But since that's where I drew the line, 59.31, that's what I'll put. 59.31 is our entry price. My stop loss then would be back below this resistance level, which should act as support. If there's enough momentum to break above it, if there's that good of sentiment, then maybe it will act as support again, like it did back here on the one-day candles. So then I just need my stop loss back below there. So let's say down at 59.10, 59.05, something like that. So stop loss 59.05 and take profit just before 6,000. So 59.95, let's say. So I'm looking at better than 2-to-1 ratio again. Not quite 3-to-1, but better than 2-to-1. About 2.5-to-1 maybe ratio here. Potential profit to risk. So I actually could say, you know what? Why don't I get my stop loss even below 59.05? Let's go below 5,900, because that would be a natural support level at 5,900. So nice round number. So if it breaks below 5,900, 58.95, okay, then maybe that's my stop loss. And now it's about 2-to-1, a little less than 2-to-1 ratio. Okay, maybe I'm comfortable with that. All right, so it's a little more patient stop loss. So I've got my stop loss then down here at 58.95. So stop loss is down here, almost into the gap. Okay, almost into the gap from last week into this week. All right, so nice patient stop loss then, and still almost 2-to-1 potential profit to risk, comparatively speaking. Now the trick is just adjust my trade size to be the amount of risk I'm comfortable with. And so instead of 1.5 lots, maybe I'm doing 0.15. And now I'm risking 540, which is almost exactly 1%, just a hair over 1% of my balance, so 0.14. And now I'm under 1%, trying to make near 1.5, 1.8%, something like that, potential profit. Not quite 2-to-1, but much better potential profit than what I'm risking, and a very low risk move, less than 1% of my balance. Okay, and it makes sense from a technical perspective with nice support levels below. It makes sense from a fundamental perspective, perhaps as well, but this will only trigger, this will only be a trade if it breaks through the resistance and hits my entry price. It has to establish an uptrend first, because this is a pending order. Execute when price hits, and I always say it should say execute if price hits, because it might not break through and hit our trigger price, or it could. Okay, and so if I like the setup, the risk management, potential profit to risk, then I'm ready to go. Okay, so we've got one trade that's an order. That's the one we just set up. If it reaches the trigger price, it will take off. And one that is a trade that we opened right from the start, which is still sitting in a small profit, trying to decide if it wants to surge up further or not. The technicals show that maybe it will, and the fundamentals maybe support that as well. We'll see what happens with it. Any questions, comments? I do see a couple that have popped up. Okay, there's a question, how do you set a trailing stop loss? The ability to put a trailing stop loss does not exist on our web trader or our app. I believe it is going to be one of the upgrade features coming. I think within the next quarter, we're having some more upgrades to our web trader and app. So we'll see if that's in the next update to our platform. But for now, if you want to do a trailing stop, you just need to log in on the MetaTrader platform. And once the trade is open, you can add a trailing stop from the MetaTrader PC platform, MT4 and MT5 platforms, once the trade is already open and running. Okay. One caveat with that, you have to keep the platform logged in in order for that trailing stop to stay active, because the trailing stop is client side on your side and not server side on our side. So trailing stops have to be set through the MT4 or MT5 PC platforms, and then the platform has to stay on. You have to stay logged in with that running for the trailing stop to stay active. Okay. It may be easiest if you're working with a remote connection where you have a computer that stays on all the time. But hopefully we'll have that feature added to our web trader soon. Very good question. Okay, so there's a question about we investigated the candle patterns when determining entry points and exit points. And the question was, do we also look at some indicators? And my answer is, yes, you can. I don't use a lot of indicators in my webinars because there are so many different indicators, and everyone has their favorite one or two. And really, the indicators are reading the candles. And so if you learn how to read the candles, then you understand what most any of those indicators are looking at. And so whether it's an RSI, indicator, relative strength index, a stochastic indicator, the MACD, etc., they're all looking back at those candle patterns that we just analyzed manually and making a decision of when you might want to buy or sell. What I like to say is we are smarter than the indicator, because the indicator, after a movement rises enough, almost always is going to tell you, okay, you should sell. And if it drops enough, it's almost always going to say you should buy. That, if it's overbought, sell. If it's oversold, buy. Many of them will wait for the reversal first to come back up. You drop below the 20% line, that comes back above the RSI, then that's a signal to buy. Or the opposite, if it goes above the 80% line in the RSI and then it reverses and comes back down below it, then that's a signal to sell. That's all purely technical based. But what about the news? What about what happened today? There's a reason why in the S&P 500 I'm waiting to see if it'll break through to another high today to buy, rather than selling just because maybe an indicator tells me it's overbought right now. So I like to add the indicators after the fact to see if they're showing uptrends and downtrends, to see what those signal patterns are. But I always try to first do it manually because it's more educational for you to understand how to read those candles that the indicators are reading for you. And so I say the way we did it today makes sense. And then whatever indicator that you want to confirm things with, then you can add the indicator to the chart after the fact. So if I want to put the US 500 here and expand this chart and then switch maybe, 2-hour candles, and let's get rid of these lines, and maybe we'll add the RSI indicator. Okay, and so we go to indicators. Here, relative strength index, slide it over. Okay, you can change the settings to your favorite settings and click save. Okay, so as I look at the relative strength index, just as I suspected, because of all the climbing it did this week, okay, you see the uptrend on the screen. What you see is this movement in the RSI went up above this trigger line. I said if it goes above 80, in this case, the settings are on 70. I could change the settings and change it to 80-20 instead of 70-30 if I wanted. Okay, there are reasons why you might want to be more stringent or looser with those settings, but the default's on 70-30. So it went above 70. The way a lot of times this is read is if it goes back below, that's a signal to sell, then establishes a reversal and a downtrend. So it's overbought when it's above 70 or 80, however you have the settings. When it goes back below, that's a signal that it will drop then. Look at the false signals. It went down. If you'd have sold, it went back up, you're a loser. Okay? Why are there false signals? It went down, it's telling you to sell. Look, it went back up again. Another potential loser. Why is it doing that? Why is the RSI indicator throwing you false signals? The answer is because it's not taking into account the fundamental news. The fundamental news is so positive that even when the RSI is saying the US 500 is overbought and then it starts a small pullback, it's telling you it should sell now because it's overbought and it reversed to come down. Why is it wrong? Because it's not paying attention to the fact that tax cuts are coming soon. Maybe in the US, the House passed a tax bill potentially. And I didn't even mention that positive sentiment news until just now. Deals with the US and multiple Middle East countries bringing a lot of investment into the US. That's the reason why when this went down, it didn't continue to drop and it went back up. Positive sentiment about maybe less tensions in the Middle East or between Russia and Ukraine. There are a number of fundamental news stories as to why when this went down, it was a false signal and it went back up. Okay? So you have to be careful when you're using indicators that when it's telling you something, in this case, is overbought and it shows a reversal, that then it's the signal to sell. You have to also, you don't have to, but I suggest that you see if that sell signal here is in alignment with the current fundamental news. And looking at the fundamental news, you'd have said, okay, I don't trust this RSI sell signal, and you'd have been right not to trust it because up it went. And look at all the climbing that occurred from this sell signal here. This was the sell signal right here. Look at all the climbing it did when it reversed and went back up above the 70 line here in the RSI. Okay, a huge amount of climbing. Any short-term trading, you'd have been knocked out just like that. So this is a good lesson on how to avoid false signals from indicators by paying attention to the fundamental news. Now, what if it was the opposite? What if all the news today was bad news? If Trump went to Saudi Arabia and Qatar and or Qatar and UAE, and maybe all the news headlines were Trump doesn't get deal. No new investment into the US. Deals were rejected. If it was all negative news, then when this went down below 70, I would have trusted that RSI signal. So the indicator is giving you a good indication that, yeah, it's maybe overbought from a technical perspective, and that's a good technical reversal when it dropped down. Now see if the fundamental news matches, and if it did, then I would have been all in on selling on this signal here. The fundamental news didn't match, then you successfully don't listen to that false signal, and you didn't take the loss there when this went rushing back up above the 70 line here. Okay. All right. Very good question. And the RSI is a common indicator. That's why I used it as an example. There are many indicators that you can use here. You can pick your favorite one that you're most used to or most familiar with. But I think you understand my point that indicators are useful to let you know from a technical perspective when something might be throwing a signal to buy or sell from that technical perspective, but then line that up with the fundamentals and see if it makes sense for you still. All right, everybody, I think this is a good place to stop. Thank you for joining the session. My next session is tomorrow, earlier in the day, 11 a.m. UK time, and we'll spend more time on the fundamental side of things, but of course, we'll still look at the technicals when we're trying to zero in on entry and exit points. All right, everybody, thank you so much for joining and good luck with your trading.